Welcome to Good as Gold, hosted by Nick Grovich, a show dedicated to helping you understand precious metals and rare coins, how to avoid the pitfalls when buying, and how to understand the inner workings of the precious metals market. Now, here's the host of Good as Gold, Nick Grovich.
Hi, this is Nick Grovich on Good as Gold. I haven't been here for a couple weeks, and a lot has happened in the metals market, as you probably know. So we're going to talk mostly about the precious metals today, and maybe if I have time, we'll talk a little bit about how the coin market is reacting to this downturn. But, metals right now are making everybody rethink what their goals were, rethink what their position is. A lot of people are questioning whether gold has broken its long-term uptrend. It's been a tough market for the last, going on 3 years now. And, there's as many opinions as there are people out there. There are still experts, or so-called experts, still saying we're going to see $5,000 gold. I was just reading an article this morning by a gentleman that's fairly well known in the business. He writes a newsletter and predicts, tries to predict gold and silver on the short run, which is a hard thing to do. But he's still saying nothing really has substantially changed as far as the geopolitical story, as far as the economics in this country, and as far as government pretty much watching out for themselves and not us. So he's still looking for gold to go to 5,000, and that may be possible. The problem is people for the last 35 years since I've been in business, everybody thinks the big run is right around the corner. And we'd all love to see gold take off or silver take off and cash in and pat ourselves on the back for being so smart. But the reality is that these big runaway markets don't happen that often. I mean, we had one in 1979 and 1980. That's right when I got into the business. And then gold peaked out a few years ago at nearly $2,000 an ounce. So, I remember shortly after I got in business, gold had just dropped from $870 and silver had dropped from $50 an ounce. And everyone was convinced it was going right back and it was going to go higher, and nobody wanted to give up. Some of the dealers that are still in business today, the people I'm thinking of, I won't mention names, but ever since 1981, they've been telling clients gold's going back up. It's gonna go higher than the old high of 870, and silver's going back to $50. And 30 years later, it finally did, and they're patting themselves on the back for a good call. Well, if your time span's 30 years, I guess that's okay. But what I see, like I said earlier, is that most people get in, and unless they're really doing it for the reasons they profess, a lot of people say they're doing it as a hedge. They're doing it, just to have a little insurance. And those people are not going to get hurt no matter what happens. So gold is down, silver's down, the metals in general are down quite a bit the last week. Like I said, if you did this the right way, it probably doesn't make a big difference to you, but all too often, people get carried away and they put too much of their portfolio into the metals or coins, and those are the people that are sweating it out right now. So if that's you, it is a good time to take a look at what you have and make sure you're really positioned for the circumstances you're trying to protect. Make sure you're not overweighted. Honestly, right now, there's just as many people I respect saying gold's going to $1,000 as there are people that are saying it's going to go up from here. Quite frankly, I don't see anybody buying right now. I talk to my dealer friends. Nobody's buying any bullion right now. There's a little bit of platinum trading hands. But I don't see a lot of buying in gold and silver. So without the demand, I don't see what's going to push it back up right now. And we're going to talk a little bit more in detail about this. So people that call me are all asking pretty much the same question. On the geopolitical front, it seems like we're having problems in Syria. We're trying to deal with ISIS. Putin's in the Ukraine. He's not going anywhere. We're wondering where he's headed after that. We've still got problems. We've always had problems in Israel and the Gaza. So all of that should be really positive for gold and silver and the rest of the precious metals. And yet here we are darn near at the lows for the last couple of years, last 3 years. Gold's just barely over $1,200. Silver's in the mid $17, platinum right around $1,340, and even palladium's come down almost $100. So since nothing's really changed, and in fact you could argue some of these things have gotten worse, why is gold going down? We're going to talk about that, but first let me back up. A few weeks ago, the metals looked really good. I talked about silver. I talked about charting. We talked about charting compared to the fundamentals. That is, what's going on in the world and which one determines, or is it some combination that determines where the market's going? And one thing I do try to tell people is go with your gut. Don't let somebody tell you the chart says it's going up, or there's a war coming, so it's going to go up. Or usually, if you go with your gut, you're as likely to be right as anybody else. But what I'm getting at is, a few weeks ago, if you looked at the charts, they looked really, really good especially for silver. There were some chart formations that are typically very bullish. We had tested some key support levels and they had held, and everything looked really bullish. I was really expecting silver to take a big move up. And of course, since then, silver's come down pretty hard. And you look at the charts today and you look at what's going on, it's a whole different story. So, it's really hard. It's hard to predict what's going to happen month to month, even year to year. And so you have to look at look at why you're in the bullion markets and make sure you're in them for the right reasons. If you're in this thing for a long term and you're just trying to put some money away, it might be a good time to buy a little. I mean, I like buying on dips, and this is sure a heck of a dip. So let me talk about the individual metals a little bit. Here's what's happening right now. There's moves by Russia. We all know about this. Nothing I'm going to tell you is going to be earth-shaking or shattering, but, nobody's really taking these moves by Russia very seriously. There's a lot to that story. Putin really, a couple of years ago, told us this was going to happen. He sat right there and told us if NATO forces moved into the Ukraine, he was not going to stand for it. And now everybody's surprised he moved into the Ukraine. It was explained to me by someone back in Washington, D.C. last week that what we did to Russia was basically the same thing as if Russia put their forces on the Mexican border with Texas. Would we stand for that? Would we get a little upset about that? Yes, we would. Well, that's basically what we did. He told us what would happen. We pushed him, and now he's in the Ukraine. The big thing is that it's pretty obvious nobody's going to do anything about it. We put some sanctions on Russia. We've tied up a little of their money. Obama's made it very clear he's not going to stop Putin by force. We're not going to get militarily involved. So nobody's really concerned about that. Same thing in Iraq and Syria. Yeah, it's a big problem, but it seems like everybody thinks we're going to solve it with a few airstrikes. We think we're going to get out of it without getting deep into a war. So nobody's that concerned about it, and people seem to be very numb about all the, I'm going to call them wars that are going on right now. Hi, Nick Grovich. I'm back with you. We were talking about, we're trying to talk about why gold and silver are down and talk a little bit about the metals. What's going on is that Russia's told us what they were going to do. We chose not to listen to Putin. The terrorists have told us what they're going to do. We chose not to listen. Now we're acting very surprised that we have these problems, and everyone's been real upfront telling us what they're going to do. It's just they've been doing it for so long, nobody seems to be real excited about it. Europe's on the front lines over there, and they're not even that worried about it. It's kind of crazy because in a different time, people would be very upset about what's going on with Russia and the Ukraine, because if you go back and look at World War I, there's a lot of parallels. But in today's world, we're so used to it. I think everybody shrugs and says, well, it's just another inconvenience and it'll go away. Same thing in the Middle East. Britain actually was talking to Iran. I think it was yesterday. They met with the Iranian prime minister, and that's the first time since they did that since 1979. We're over there. We're training. We're partnering with other potential terrorist groups. I think one of the groups we're talking to in Syria has ties to Al Qaeda. So we're kind of getting in deeper and deeper over there. I wouldn't be surprised if somehow Iran ends up being one of our allies in this whole thing somewhere along the way, which would probably be a good thing. But the markets are looking at this completely different than what us gold bugs might think. Usually we think war, strife, inflation, that means gold goes up. Well, here we have that. We have, we have a lot of wars, a lot of possible big consequences, especially with Russia, and yet gold's going down. Well, what's going on is we have the sanctions against Russia. They're really hurting Europe more than they're hurting Russia. The European economy is in terrible shape. Just this morning, I was watching the news, and the German stock market was near crashing this morning. It was down pretty big, headed towards lows. And Europe is now following our lead. So they're going to institute quantitative easing. They're lowering their interest rates to basically zero. They're even talking about a negative interest rate. And the euro is just falling out of bed, just like the dollar did when we did the same thing. But nobody's really thinking of safe haven, and that's where gold comes in. Right now, they're just looking at how, what's the easiest way to protect their buying power, and they're putting into the dollar. So if people don't have that safe haven mentality that things could fall apart, there's really no reason for them to go into gold, and they aren't. The stock market's up 6,000 points, for crying out loud. Why would people go into gold until they see it start moving? So it all comes back to how strong the dollar is. The dollar is the main driving factor behind the metals right now. The stronger the dollar gets, the weaker that gold and silver are going to be. And the dollar is actually reaching I can't say how many year high, maybe 3 or 4 year high right now. It really looked like it was going to slow down, looked like it might dip a couple of weeks ago, but instead it's just kept going up. And until that stops, you're not going to see gold turn around. So it's a little backwards. It's a little different than what we usually think. But what you have to remember about gold, it reacts to a psychological market just as much as to real circumstances. It reacts based on what people think is going to happen. So right now, the dollar is very strong. On top of that, we're talking about raising interest rates in the United States, so that makes the dollar even stronger when you look at Europe, who's going to maybe a negative interest rate. So those are all reasons why people are buying dollars and not gold. So what has me a little scared about the gold market, the gold has actually held up pretty well. We've talked before about support levels, $1,180 to $1,200. That's a support level on gold. Last night in overnight trading, it looked like it dipped below $1,200. This morning I came in and it was back over $1,200, which is good. But like I said, nobody's buying. I talked to other dealers and they're not selling gold. So it's going to be kind of interesting if the dollar continues to get stronger and gold dips below $1,180. I'm not predicting this, but I am saying there's a real good chance it could go down to $1,000 before it turns around. So I guess, if you're overweighted in some of these metals, whether it's coins or bullion, you might want to take a really strong look at your portfolio and make sure that, if the worst happens and gold does go to $1,000 or even lower than that it's not going to affect your way of life. And if it is, you have some decisions to make. Same thing if you're in silver. Silver has really collapsed. It's kind of ironic because a few weeks ago, I thought silver had the biggest chance of making a nice move upward. I have not been a huge silver bug. If you've ever talked to me or read any of my material, I don't believe a lot of the so-called facts about silver. Ted Butler writes a newsletter out of, I think it's out of Minnesota. For many, many years, he's written about how we have silver shortages year after year, how we can't mine silver for what the price of an ounce of silver goes for. And, we all know the arguments for silver. Silver has been the one metal that it seems like most investors have always agreed that silver was the best buy. And I can't argue if silver goes back to the old highs of $50. That's a huge move percentage-wise. That's bigger than what we'd probably see in gold or platinum or palladium. But it's a big if. That's, if it goes back to $50. And so it's not going back to $50 anytime soon. The thing that worries me is $18.75 was a major support level. This morning it was down to $17.30. It looks like it's settling more or less right around $17.60. So we're a good $1.20 underneath the support level that was so critical. And it makes me really nervous about silver. Again, if you look at the charts, you talk to some of the people that are a little more bearish out there, there's a lot of guys looking for $14, $15, even $12 silver right now. So, look, there's no shortage of silver. That's kind of a myth that's been perpetuated for the last decade. You can look just a few weeks ago when I was telling you can get a discount on silver. The reason people were discounting silver is there was more silver around than anybody knew what to do with. Dealer inventories were huge. Dealers couldn't unload it. Their vaults were full. Anyway, I don't know what to say about silver. It makes me a little nervous right now. I'm just really trying to give you some of the facts that maybe you don't hear everywhere else. I just want to be clear. I'm not predicting $14 or $15 silver. I'm just telling you it's a real possibility at this point. Could it turn around from here? Yeah, it could. I just don't see what's going to make that happen unless some outside influence comes into the market. So the metals I do still like are platinum and palladium. Now, maybe I sound like a broken record on the platinum. I've liked platinum for 2 years. The platinum and palladium have also dropped in this downturn, but they've dropped for a little bit different reasons. They're always going to drop in sympathy with gold and silver. Platinum and palladium to a little lesser extent. In general, move with gold and silver. They're considered precious metals, so some of the same factors will affect those metals. But they tend to react also to inversely to the economy. So if the economy is terrible, the general thought is gold will go down. Well, if the economy's great, platinum can benefit by that because platinum's basically an industrial metal. The same thing with palladium. Now, I see we're coming up for a break in a minute, so I'm not going to get into the details just yet. But palladium is down to about $805 today. Platinum's down to about $1,343. When we get back from the break in about 30 seconds, I'll talk a little more detail about it. The good news is that because they've come down with gold and silver, you're getting a big discount on platinum and palladium right now. But what I want to talk about after the break is that the ratios between platinum, gold, and silver are pointing to a big discrepancy, and the fact that gold and silver could drop substantially from here actually could support this ratio. So when we get back, I'll try and make some sense out of that for you. Nick Grovich back with you. We're talking about the bullion markets and this downturn. I want to mention something. It probably comes across, I'm a little pessimistic right now on the bullion markets. And I said earlier, this is a psychological market. And the reason I probably am pessimistic is the same reason that nobody's buying gold, silver, or platinum today. Everyone's a little bummed out. They're looking at the market. We're at some points where the market could really go down hard. And of course, it could turn around and go up. But when the market's going down, nobody can picture it going up. And when the market is going up, nobody can picture it going down. And that's why there's tops and bottoms. I was talking to one of my guys this morning, and he said, why is nobody buying? At $50 silver, we couldn't buy enough silver to supply our clients. At $40, $50, people were standing in line to buy silver. Why is that? Well, because at $50, it was in a bull market. We'd gone all the way from $5 to $50. What a great track record. And while it was going up, it creates kind of a mania. Everybody gets excited. They start predicting $100. Next thing you know, it's back down to $20. And all of a sudden, nobody wants to touch it at $20. And I guess that's just human nature. When it's coming down, people are pessimistic. Gee, it's down to 20. Oh, now it's down to 18. Where's it going to stop? And they get I don't know if depressed is the right word for it, but they get disenchanted maybe with the prices, and they ignore it. They go away. They don't think about it. When really, if you're committed to this, if you're really committed to what you believe in and committed to the reasons you're buying, you would buy on these dips instead of looking at it and being worried about the end of the silver market or the end of the gold market. Are we still in a 15-year long-term bull market? I don't know. Nobody really knows for sure. So that's why I keep telling you, you have to be committed to the reasons you're in it. If you're in this just to try and make money, or some broker talked you into it and told you you're going to be rich, you're in the wrong thing, and you probably have no business being in here. And that's true of any investment. If you're in it for the right reasons, it's a hedge. You're just doing it to put some money away. You probably don't care why it's down. Probably don't even care that it's down $100. So anyway, I'm just trying to explain to you what is going on in the market right now. So let's look at palladium. Palladium, not too long ago, had just topped $900. I remember a couple months ago, I had a caller who asked me what I thought of palladium. I think it was around $850 at the time. And my feeling at that time was that it was probably worth holding on to because there's a lot of changes in that market. And so for a couple of months, I looked like a genius. I went up to $900. So I gave him good advice. Of course, today it's down to $805. So I probably don't look as smart today, but it's all a matter of why you're holding the metal. If you're just trying to play it short term and trying to make $50 or $100 on it, that's a tough game to win. Palladium. So why is palladium down? It is a precious metal, but it doesn't typically move up and down with gold and silver. It's a lot more volatile than platinum, so you'll see bigger moves percentage-wise. Palladium's a very, very rare metal. It's usually they say about 30 or 40 times more rare than platinum. It's used in catalytic converters. It's got a couple other uses, but the biggest use is in catalytic converters. So a lot of people look at the economy in in Europe and the United States, and if they think the economy is getting better, then they like palladium. If they think the economies are going in the tank, they'll sit on the sidelines. Most of the palladium comes from Russia, which is kind of interesting with what's going on in Russia. They are known for playing games with palladium. Even 10, 20 years ago, they pretty much controlled the market. So they would hold back. They let the price go up, and then they dump their supply. And that would happen maybe once every year and a half that they would sell. Typically, they're not selling all year round. They typically wait for the right time, and then they sell their metal. A big part of what's happening with palladium prices right now is that there was a story, I don't know if it's true or not, but it came across on Reuters, and it said that the Russian government is in talks with a company, I don't know if I'll pronounce it right, Norilsk, Norilsk, Norilsk nickel. So it's a metals company apparently. And they're supposedly making a deal to sell $2 billion with a B dollars worth of palladium to this company, so this company can meet its long-term commitments of palladium. Now, I don't know what this company does. I didn't have time to look it up. But $2 billion worth of platinum is a lot of platinum. And the interesting thing is that would be if you add it up, depends what price you use. You use $800 or $900. That comes out to over 2 million ounces of palladium. And just 2 million ounces of palladium is probably over a year's supply, more than what they mine in a year. Now, I'm guessing at that. I don't have the numbers in front of me. But here's the interesting thing. Russia doesn't really tell anybody how much palladium they have. There's researchers that try and keep track of it. They try and make estimated guesses. And the market consensus is that the Russian supplies are nearly depleted. And the researchers are saying that at most, they thought Russia might have 100,000 ounces of palladium. I'm kind of daydreaming here. So they're saying Russia might have 100,000 ounces of palladium, and yet a news release comes across that they've got 2 million ounces that they're making a deal on. So you can see that would cause a little bit of confusion in the palladium market. If they have 2 million ounces instead of 100,000 ounces, that substantially changes the supply-demand equation on palladium. So there's a big question about what's going on. And like everything else, when in doubt, people sell off and sit on the sidelines. Now, if that story about the 2 million ounces is not true, here's the flip side of it. They're predicting a $1.5 million shortage for both 2015 and 2016. So here you are, you've got all this different information. If you listen to one story, you'd want to bail out of palladium. If you listen to the other story, palladium should be going up like a rocket. So which is it? No, we don't know. That's the whole problem. Russia produces about half of the palladium worldwide every year. So we don't know. Could they have been stockpiling for a long time? There's a big question about that. Right now, palladium's off $100. And I guess your risk is that they do have $2 million. But I don't know that I would tell you to jump into palladium. My gut feeling would be it's probably a pretty good buy right now. It was really moving well, getting up to $900. They make palladium maple leafs. Canada makes a palladium maple leaf. It's a 1 ounce coin. And we also trade in palladium bars. They're usually readily available. So, the nice thing is the market's discounted $100 right now just on that story that Russia may have sold $2 million or $2 billion worth of palladium. And as I think about it, does that have a big effect on the market? That's a lot of palladium, but if it's sold, it's not going to go on the market. It's already pre-sold. So it really just might be, a transfer, just like they do with gold. They just put a different name on the safe deposit box. It really doesn't affect the market. So, if you're a gambler, if you like palladium, might be time to pick up a couple bars or a couple maple leafs at a little discounted price. If I knew more, I would tell you more. I do try and get updates out through an email newsletter. If you're interested in getting that newsletter, call my office at 800-221-7694. They'll be glad to sign you up. Tell them you want to be on the preferred client newsletter. You can also email me at nick@americanfederal.com or just go on americanfederal.com and sign up for the newsletter. It's free. I won't say that I can predict gold, silver, and platinum correctly all the time. I'm not going to even say that I try to. What I will do is give you information when I think it's important that you know about it. Okay, the last metal, obviously, I want to talk about is platinum. I think platinum could be the safest bet right now when you compare it to gold and silver. Gold and silver are really, the charts don't look good. They don't feel good right now. Maybe if you're contrarian, that's a great time to buy them. Platinum has really just kind of followed gold here for the last couple of years. But I have a feeling that platinum could be a lot more profitable and a lot less risky than gold and silver right now. And here's a couple reasons. Platinum has a ratio to both gold and silver. Just so everybody's familiar with the gold-silver ratio, but not too many people are familiar with the platinum gold ratio or the platinum silver ratio. So what I did is I went back, I looked, information's so easy to get now with the internet. So I went back and did this. It took me 20 minutes. It didn't take me 20 hours. But the average ratio of platinum to gold is about 1.36 to 1. So basically platinum should be about a third more than gold, and that's been the ratio for about 40 years. When you look at silver, for the last 40 years, it's averaged about 110 to 1. So 110 ounces of silver would equal 1 ounce of platinum. And those aren't written in stone, but they've been fairly reliable over the past 40 years. And the way you use those ratios is you use those to give you an indication of whether one metal is underpriced or overpriced compared to another metal. And most of you have probably heard the gold-silver ratio. Everybody talks about the gold-silver ratio. So this is just taking that one step farther. When we get back from the break, I want to talk a little bit more about what this platinum gold and platinum silver ratio means in this market and how it limits your risk. Nick Grovich back with you. I'm kind of surprised nobody has questions. Either I'm doing a really good job of giving you all the information, or I'm boring you to death, or I don't know what. But if you do have questions or comments about what's going on in the markets, I'm really happy to hear from you. I'm glad to, if there's something I haven't mentioned that you want to talk about, I'm glad to hear it. It doesn't, just because I watch it doesn't mean I catch everything across the newswire. So we're talking a little bit about platinum. I'm hoping to talk just a few minutes about the rare coin market too. But so you look at the platinum gold, platinum silver ratios, and they're very out of sync right now. They really favor platinum over either of the other metals. So generally, here's what happened the last time the ratio was this far out of whack. Of course, we all would like if platinum went up. So if gold was at $1,000, platinum should be $1,360. And guess what? That's right where it is right now. So I find it really interesting that there's, I don't want to say a consensus, but there's a lot of people that I respect that are saying gold could hit $1,000. Then I look at it and I say, well, the platinum ratio is out of whack, and that at some point has to get back into normal ratios. So with gold at $1,200, that would put platinum at $1,600, give or take. That would be a pretty big jump for platinum right now to run up to $1,600, but that would put it back in sync. The other thing, like I said, the other way you can fix a ratio is if one of the metals, gold, goes down, that also brings it back into a normal ratio. So gold at $1,000 would justify platinum right where it is right now. So that's why I'm saying on one hand, when you look at it that way, it really reduces your risk. We made the same trade a couple of years ago, and I don't remember the exact numbers. I do remember platinum was right around $13.85 because that was darn near the low. So between $13.85 to $14.25. But I think silver was a couple $100 higher than that. Silver was up around $1,500, $1,600. The ratio is really, really far off. Platinum was actually less than gold at that point, which very rarely happens. And so what I was telling clients to do was to take their gold and trade it for platinum, because either platinum had to come up to get the ratio back in sync, or gold had to go down. Well, we all know gold went down. It went, from there it went down $300. So you didn't really make money by doing the trade into platinum, but you pretty much preserved your money, where on the gold you lost, 20 some percent. Looks like we have a caller. I must have intimidated somebody into calling. Hi, this is Nick.
Hi, Nick. This is Rick.
Hi, Rick.
My question or concern is that you've been talking about what's going on in the world in terms of wars and rumors of wars and all of that, and I look at the oil prices, and that tells me that people aren't concerned. But my concern about the price of gold and silver is really what's going on with the Federal Reserve, the printing of money,
right?
Eurozone, China, Japan printing. I don't know what Brazil, Russia, India are doing,
right?
But just the potential for this debt. There's so much debt that at some point it's all going to collapse. I think it seems like it, but it could go on for years. But that's that is more my concern as far as.
That's Rick. Yeah, that's 100% legitimate, and I don't argue with you on any of those. It's funny. I got an email from an ex-Southwest pilot. He's a friend of mine. He sent me an email. I sent an email out yesterday. He answered, and he said, "Look, I was in Argentina when they had 800% inflation. I'll be happy just to sit on my gold for a while." So. Yeah, I think all those things do affect gold, and they will affect it eventually. But all I'm saying is, and that's why I said earlier, nothing's really changed. It's just in the short run, those things are just not having an effect. In the long run, it has to have an effect. We've never had a fiat currency that's lasted.
Yeah, I agree. And like I said, and you just mentioned, they could keep this game going for a while. Who knows how long they can keep printing and have the whole thing keep going? So you can't. There's no way to call it. But I guess that's why. That's always been my main reason for holding on to gold and silver.
Yeah, and you're doing it for the right reason. And maybe I'm spending too much time on this. It just seems so interesting to me that, normally we have a lot of factors today going on that normally would make it go up, and instead they're making it go down. So that's why I chose that to talk about. But
right, no, I really appreciate you talking about this because you have covered the coins and the difference between coins and bullion and people getting ripped off and all the stuff in the past, and you've covered it. Really well.
Thanks.
Maybe more than because the shows are all starting to sound the same.
Yeah.
So I'm really glad that you are covering this stuff because I think it's my concern, and because I'm a holder of gold and silver.
Right.
I think it's a lot of people's concern. Why is it going? What's going on here?
Right. Well, if you have any suggestions or anything you'd like a show about, send me an email or give me a buzz, and I'll be glad to consider that.
Well, just this kind of stuff. I just think it's good to mix it up. Your shows to mix them up because, like I said, they were all starting to sound the same.
Okay.
When you covered pretty much the same stuff over and over. And I have listened to this fellow that comes on Fridays at 1, Dan Schaefer, and he's calling for a deflationary depression.
Right.
And he's one of the guys calling for gold at 1,000 or maybe even into the 700.
Right.
And it makes a lot of sense what he's saying about. He backs up what he says with facts in terms of deflation.
Yep.
So
I've heard him.
So I would not. I could see gold going lower.
It's the crazy thing is the people who are saying it's going lower have a good argument, and just like you said about the Federal Reserve and printing money, that's a good argument.
Yeah,
we just don't know. We just don't know what's going to happen. That's what it comes down to.
That's probably the hardest thing to deal with is not knowing, like you were saying. Do you maybe liquidate a little bit before it goes any lower, or do you hold on or buy more on the dips? It's a strange place to be, and I guess that's why you don't see any metals selling because I can imagine I'm in limbo. I wouldn't go one way or the other. I don't want to sell, but I don't want to buy.
Yeah, exactly. And I guess all I'm trying to say, if you're in it like you are, these dips don't really matter. You bought it as a hedge. The dollar goes down, you've got your gold. The dollar goes up, you don't really care. But I have to tell you, I talk to people all the time. I tried to talk a guy a couple weeks ago out of putting everything he had into gold. I wasn't selling it to him. Another dealer had him cashing in his IRA, cashing in his retirement, taking all the money out of the bank. I said, you're taking $800,000 off. By the time you pay penalties and taxes, you need to make $300,000 just to break even. And all because somebody scared him that he had to put everything in gold. So you get a move like this after you just put everything you have in gold. Boy, it can hurt.
Yeah, and you're right, and that's what happened. He either heard a radio program or someone talked to him and scared him, and he it went the opposite way instead of kind of keeping him balanced. So but it's hard because even for doing it for the right reasons, like you were saying, and you shouldn't be so worried about it going up and down, but you are. It does bother you because you still feel like you're losing money.
Yep.
So it bothers you, even though I might be in it for the reasons, that aren't, I'm not so worried about it as someone who's looking for a quick investment.
Right.
But still, when you hear, it's going down and it may be going down, you start thinking,
you're right,
Rick. Now, and, that kind of thing. So.
You're right. Hey, listen, we've only got a minute left. Thanks for calling in. I really appreciate it. And if you want to call the office, be glad to talk to you a little bit more. We only have a minute or so left on the show, so I'll try and finish up with platinum. What I was getting at is that if we do have a bigger downturn from here, if you look at platinum compared to gold or silver, for platinum to be at the price it is now, silver would need to be $12 an ounce and gold would need to be $1,000 an ounce. It's it's a pretty good reason to have platinum to limit your risk a little bit. And if gold and silver do turn around and go up, I would think you could maybe double or triple the increases by having a little bit of platinum. Anyway, we're out of time. If you want to call my office at 800-221-7694, I'll be glad to talk to you.